Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and just now I went and I started buying dips. I'm on, well, even though today's more like in the green, I've got kind of a game plan for myself, and the dips of course will be XRP and XLM, which are my two largest holdings. But I have now gotten a list of and I'll show it to you in a second, the ones I'm going to be buying into this, whatever you want to call it. If this is a crypto winter, a recession, or whatever, I'm going to be buying in the down market into the following things, and I'll show it to you in a second. Now, I'm also going to be my plan is to accumulate more private equity, whether it's Ripple, Link2, Paul, this is on Link2, and I'll put the link to this in the top of the description. In these down markets, I'm going to try my best to. I'm going to make sure I keep a good cash reserve. But then as long as I maintain that where I want to have it, I'm going to, as I have money, I will buy these dips. Okay, so the link to if you want to see if you're an accredited investor or talk to them about any of their offerings, you can do that in the top of this description. Now, I received a message from XRP Vet Diamonds to the Quant Sky this morning. That's a funny title. Anyway, this one kind of hit me because I agree with this list right here, and that doesn't mean there's not others, but I do agree with the ones on this list. I've told you for a long time on this channel, what I'm interested in and have been interested in is not all these little random tokens that don't really have any meaning. I'm interested in the tokens that are more like the infrastructure plays, the ones that I can tie to governments, the ones that are backed by major venture capital firms and are going to be a part of this new financial system going forward. The ones on this list are in that category. They're not all of them. Brad Garlinghouse said there will be scores. Well, this is the Power 8. I like that name, the Power 8. XRP, XLM, Quant, HBAR, Algo, VET, XDC, ADA. Okay, I bought just to put them on the board in my portfolio. I bought like a little bit of each one of these this morning, except for Algo, and only Algo I'm going to. I like that one too, but like Quant, I did not have any before today, but I bought into. So these are the ones I'm going to be buying into, and I'm going to be accumulating. And there's one other, which is Theta, I'm buying as well. Theta is supposed to be like decentralized video, like maybe down the road a decentralized YouTube. And so that's another one that I'm going to be accumulating. But I think there's a handful of others, and I'll add them to the list but this right now, this is what I started. As of right now, I own everything in this list except for Algorand, but I will begin accumulating that too. Now, this is a gold guy. I saw this video this morning. I want you to listen to what he says.
So it's almost guaranteed that the current monetary system, because it's no longer back to gold or anything intrinsic, will fail as well. And it's my thesis of the book that they might to bring gold back into the system, revalue gold, and to stabilize the monetary system in a way.
Now, when you hear revalue gold, what does that mean? That means set the price of gold to a higher level, because it's worth a lot more than it shows, and silver too. And by the way, I am buying gold and silver too. I'll be doing that as well in this thing. Revalue gold equals price set, new gold standards, stabilize the system. That's what they're doing right now. CBDCs, and who are they building these things on? It's XRP and Stellar. That's the fact, Jack, and maybe one or three. I don't know. All right. Hadn't looked at the XRP rich list in a while. Look at this. Number of accounts, some of the balance. Now, most people have more than one wallet, so this is not down to a science, but I do find it interesting when you start going up here. There are five 5 accounts that have $1 billion or more, a billion XRP or more, 11 that have 500 million to a billion, 70 that have 100 million to 500 million. So I think this is pretty interesting stuff to look at every once in a while. All right, then we have this, crypto company layoffs, Ponzi's. This is from Fox Business. Interesting little video here. I won't play the whole thing, but I'll play some of it.
It's 24/7, no holiday breaks. So the weekends are always a volatile time. So 20,000 is really the key level for Bitcoin, seen as an important support level for prices. And any sustained weeks below 20,000 is seen as a bearish signal, according to a lot of crypto watchers and investors. So as I mentioned, the weekend, you saw Bitcoin down 15% on Saturday, rebounding 15% on Sunday. So you really have to be able to stomach this volatility to buy in. But look, volumes are thin, liquidations and companies going under are weighing on market sentiment. And it really all started with that Luna $40 billion stablecoin wipeout a few weeks ago. And then last week, you had Celsius Bank, which stopped investors from being able to withdraw their money. Three Arrows, one of the largest crypto hedge funds around, has been accused this weekend of being a Ponzi scheme. That means using borrowed money to pay off earlier investors. Again, those are accusations, and we haven't heard much from the actual hedge fund itself. Now, Celsius last night said it will take longer to resolve that $12 billion that they have issued in loans.
All right, just wanted to show you that. Now we've got this. This is interesting too. Crypto market near bottom, relief rally imminent. And this is from Hobie Research, and they're basing it on 3 factors: pain indicator, net capital loss indicator, and big whale accumulation indicator. So it tracks the wallet addresses of whales. Looks like the whales are accumulating. The digital asset investor is accumulating. And here we have Rosie Rios from Ripple. Listen to this.
And if you're only thinking about it now, you're behind the 8 ball. The train has left the station. I keep saying that, and it's absolutely true, especially when it comes to this topic. So what people need to realize about intergenerational wealth is it's already happening, right? So we're talking about kind of, so the boomers, which is my generation, you know, we have the most discretionary income. But this next generation, basically, you know, the millennials, although it's pretty much anyone born in the mid-90s and later, you know, are going to inherit this opportunity to really think about investments in a totally different way. So when you think about those generations, so technically, you know, the millennials or anyone born between 1980 and 1996. But again, look, my son's 26, my daughter's 21. I call them the Robin Hood investor, right? But in reality, you know, these are kids who grew up with the internet. Right? So anyone who's grown up with the internet, they see the world as very flat. It's no longer what they're taught at home, what they're taught in the classroom. It's what they see. It's what they've learned, the good, the bad, the ugly of the internet. They're very tech savvy, they're very confident, but they don't have the experience that perhaps a lot of wealth managers, financial analysts, managers, etc. need to really understand how to think about their investments. So for me, you know, it was very important that I get into their heads. My daughter's 21, my son is 26. When I left the Obama administration in 2016, after serving both terms, I studied these kids, I call them kids, for 2 years at Harvard. And I really wanted to understand kind of the social, political, economic way that they think and how they behave. And for them, you know, it's kind of this one and done world, right? It's set it and forget it. Right. Technology means everything to them. They're very, very confident, they're very progressive, and they're very savvy. But again, they lack a lot of the world experience that my generation still has. So even here now in this economic downturn, this unprecedented economic downturn, this is where, in my opinion, the wealth management industry has a huge opportunity. It's no longer about taking them out to golf and buying them dinner. It's really kind of thinking about how to use technology and information in a totally different way. So if you're not already on their app, on their phone, and that's how they access information, if you're not already there, you know, you're behind.
We are here, folks. We're here. Now, James Rule put this out. Now, this is interesting. Jimmy Valley sent out an email asking the media if they will report. He says, "Good morning to everyone. Happy Father's Day to those of you that are fathers. Today is a wonderful day to reflect on the blessings of the next generation and hope they bring for justice among all people. To that end, please find attached letter previously sent to many members of Congress that have oversight of the SEC who are obligated to call for an investigation into ETHgate scandal. The story has exploded. and global market and continues to experience dramatic Streisand effect due to the lack of coverage by the mainstream media. So I ask again, will you report? Here's what's interesting about this. Look who he copied on this email. That would be Jay Clayton. What do you think? I was asking my father, who is the official father of the Digital Asset Investor channel, what he would be thinking if he was Jay Clayton receiving that email, and he said, I would be S-wording my pants. That's what he said. And then John Deaton's law firm, Crypto Law, says Gary Gensler invites the public to reach out to us if someone is not following the rules. Empower did that on May 9th with a referral of evidence of violations of ethics directives by SEC high officials to the SEC Inspector General. Now, GOP leader Kevin McCarthy has replied to a Connect to Congress message that Empower's referral raises additional questions pertaining to senior staff compliance with ethics rules, and I will continue to monitor this issue. 3, the SEC Inspector General has not yet acknowledged receipt of Empower's referral. We will keep the pressure, folks. So the Fed prints money for decades. Now all markets are tumbling, but they point the finger at crypto to bring in regulation. Do they question QE 1, 2, or 3? No. Do they question the Fed itself and how smart the supposed smartest people in the room really are? Do they question that? No. They just question crypto. And that's because it's all planned, folks. And then suddenly, BlackRock is activated. BlackRock has, I'm not going to play this, but this guy, Rick Ryder, is commenting on crypto here. It's a durable business, but there's much excess built around it. It's not terribly dissimilar to the internet bubble. You have to de-gear that dynamic, and I think we're seeing that today. In other words, get all the trash out, take the trash out, and then invest, and then they come in and behind the scenes they're investing in the Power 8 and some others. How about that? That's what's going on now. But you can't, BlackRock, I'm going to put this on the thumbnail, BlackRock activated. And it has significance too, folks, and I'm going to show you why. Remember this from Jim Rickers? Remember Ice 9?
I was having dinner with a friend not long ago in New York City. We met at a place called Oriole, which is in Midtown. My dinner companion that night was a senior advisor to BlackRock. As you may know, BlackRock is now the largest asset manager on the planet. It directly manages $5 trillion in assets, and it oversees another $11 trillion through its Aladdin platform. That means one firm controls more money than the GDPs of China, Russia, and Japan combined. Anyway, my dinner companion happens to work directly for BlackRock's CEO. As we nursed our white wine and the evening wore on, she let something slip. If I remember her words, she said something like, "They want to tell us we can't sell." What was she talking about? Who was she talking about? These elites share one vision, and they're about to make it a reality. That vision is one world order, one world taxation, and one world money.
All right, I'm not going to play the rest of it, but I do want to remind you, posting this video, which is Jim Rickards in his own words, I didn't say anything bad about it. In fact, I thought it was great that he said it. Posting that video got me blocked by Jim Rickards. That's when he blocked me. So apparently he doesn't want people seeing that video now. Last thing I want to show you is this from Gold Telegraph breaking news. ECB President Christine Lagarde, who does meet with Brad Garlinghouse, is warning of the risk of an abrupt correction in Europe's financial and housing markets is high. There it is. We're on the final stretch now. I think the guy that whoever runs Gold Telegraph is over the target here. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that it looks like we're in the final stretch now.